Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of July 22nd through July 26th, where we'll try to see if the reign of the Magnificent Seven is over and what that may mean for our trading, how we can make money trading, whether or not the reign of the Magnificent Seven is over. So thank you again for joining us for part one of our weekly trading game plan for July 22nd through July 26th, and let's get started. Good morning and welcome, Gerald Fitz, Fairchild. Thank you all for joining us in the chat today. Hope you all are doing well. So here's our Google document with our notes for part one of our weekly trading game plan for July 22nd through July 26th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our Google documents contain links to bonus videos, the tools and resources we use to do our market analysis, come up with our trade ideas, market strategies, etc. You can find a direct link to that Google document in the description box below. We keep all of our Google documents with our notes for our weekly trading game plans in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weeks, and you can also find a direct link to that publicly accessible Google Drive folder in the description box below. Welcome, Douglas PC, the Ricky Khan, Nagam. Thank you all for joining us in the chat today. So firstly, we'll take a look at how the markets ended up on Friday. The main page in FinViz, we can see we had significant correction in all of the indices. So the Dow was down 0.93, NASDAQ down 0.81, S&P down 0.71. We had almost 70% declining, 25% advancing, split between 48% new highs, 52% new lows. We still got 64% above the 50-day moving average, 36% below, and still 69% above the 200-day, 31% below. So generally bearish, pretty much declined all day. Again, as we talk about our theme for this week, is the reign of the Magnificent Seven over? We can see Magnificent Seven, significantly red, significantly negative. On Friday, the only sectors that were somewhat positive were healthcare, and I think we'll see some others, utilities maybe, and maybe some defensives. So we see some of the headlines. Big tech stock slump amps up pressure to deliver on earnings. Again, we'll talk about the reign of the Magnificent Seven being over, and we'll also talk about their earnings season. Trump trade. Berkshire sells a big chunk of Bank of America. Dow tumbles more than 370 points. S&P post worst week since April. And we'll talk about the CrowdStrike and Microsoft outage and how that may potentially again impact some of the Mag 7s, the big cap techs. We saw oil break down below 80, so now we've got 80 as resistance, probably 75 as support. Natural gas hit a low near 2 and bounced back up a little bit. We saw gold make a run towards 2,500 and then corrected significantly. We see the futures are all pointing down on the Dow, S&P, NASDAQ, and Russell. I also saw a big correction at the market close on the yen. I'm not sure if that was some intervention or what the reason is for that big market on close on the yen. I think the DXY is around 104 or so. Bitcoin had a recovery back up into the 66, and Treasury yields recovered. They were down in the low 4s and bounced back up to, you can see the 30 years significantly higher than the 10 still at 4.45. So we'll see Treasury bond prices decreased. Welcome, Easy Mike. Thank you for joining us. Hope you're doing well. So we'll look at a breakdown of each of the major indices and then also the technology components. Talk about, again, if we can see if the reign of the Magnificent Seven is over. Just a quick reminder, you can find links to these screeners in our documents, also in the screener sheets of both our ETFs and our Watchlist Google Sheets. So let me grab a quick drink and we'll go over the major indices for this week. I'll also try to answer. I saw Gerald ask the question, I believe it was Gerald asked the question if we're entering a bear market or if this is just a correction. So again, we'll try to see if we can get some insight into that as well. I'll give my opinions. Again, all of our content, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. But if we look at the indices, if we look at the Dow first, we can see it made a new all-time high and then corrected. We also see very similar in the Russell IWM. Again, we had that exuberant run-up on speculation of sooner and more rate cuts. So we had that overly exuberant run, made a new high, significantly corrected. We can see the Dow broke down below that upper trend line. It's got some room above the moving average. So again, in my humble opinion, I think more potential downside to correct in the Dow. We will get probably some resistance at those previous highs. But again, that was a pretty exuberant run to a new all-time high and a significant correction. And again, tomorrow we'll talk about opportunities and also in our ETFs and opportunities, how you can trade both of the longs and shorts. We've got some good ETFs that if you're nimble, you can make some good money on these overly exuberant long runs as well as the corrections. Again, the Russell's got significant room above that previous top. So again, significant potential more downside. The moving average is significantly below that. So again, we could get, significant correction more in the Russell. The SPY is approaching its lower trend line. So in my humble opinion, also the moving average is converging on that lower trend line. So again, I think that will provide some support in the overall SPY. Again, my humble opinion, I think we'll see sector rotation kind of hold up the SPY as it's broader. Again, we saw, Q's made a new all-time high, significant correction, again, driven mostly significantly by the Magnificent Seven. Also semiconductors, TSM, ASML, etc. Still got some room above the moving average. So again, I expect some more downside until it gets support from that longer-term moving average. And again, Gerald, to just discuss your bear market question. And again, in my humble opinion, I think this is just a correction in valuations. I don't think this is an overall bear market. But again, that's my opinion. Love to hear what other people think. So if we look at a breakdown of the technology components, again, focused on our topic of it's the reign of the Magnificent Seven over. You can see Fang Yu, which isn't exactly the same as the Magnificent Seven, but the previous Fang stocks. And we can see it broke down below its support level, approaching its moving average. So again, I would expect that longer term moving average to provide some level of support. Had an exuberant run, new all-time high, and pretty significant correction. So again, this, good indication that potentially the reign of the Magnificent Seven is over, at least for the time being. Again, in our strategies, we'll talk about short-term, long-term. Again, it's the reign of the Magnificent Seven over. But again, I expect that longer-term moving average to provide some support. We had ARK-K made a run off that kind of risk-on move along with the IWM, the Russell. So when we got that risk-on move, ARK-K made a run, hit the upper trend line, got rejected, headed back down again with more of a risk-off movement. Probably get some support from its moving average. But again, this is moving right now with a risk on and moving down with a risk off. Same way with biotech, very similar. Got a risk on move, made a high on that trend line, got rejected pretty quickly. Again, significantly more downside in biotech on that risk off move. Semiconductors broke down. Again, we've got, NVIDIA of the Mag 7. We also had negative guidance from ASML, kind of the Taiwan issues, political issues with Taiwan Semi. So it broke down below its moving average, got significantly more downside to its, longer term moving average. So again, semiconductors, I think, in a pretty strong downtrend right now. Talked about the NASDAQ. Again, TQQQ is leveraged long on the NASDAQ. So again, it's approaching that support level. So we'll probably see some support in the broader NASDAQ by that moving average. And the broader technology sector, TECL, see it broke down below the moving average. Again, this is a little bit broader than just the NASDAQ 100, although still heavily weighted to the Mag 7, Apple, Microsoft, etc. So again, some more downside, probably get some support from the previous high, but again, significantly more downside in the overall technology sector. So I hope that all helps. Welcome, Carmen. Thank you for joining us. Ellen Krantz. Glad to see you all in the chat. Hope you all had a great week, doing well. Okay, let me grab another real quick drink and we'll go over the groups and sectors. We'll see what we can see in terms of sector rotation. Okay, if we look at the groups and sectors in FinBiz. So again, Friday, we see really the only sectors that were positive was healthcare and utilities. The worst performing technology, energy. Again, we saw oil break down below 80. Financials had a correction. Industrials had a little bit of a correction. Real estate, again, we're seeing some recovery, but we did see a bounce back in bond yields, so that impacts mortgage rates, real estate, etc. Real estate, again, had a positive week. Financials positive. Energy and industrials. Again, the worst were technology, communication services. Again, heavily impacted by the Magnificent Seven. Basic materials, negative for the week. So again, we saw that run up in gold and silver and then a pretty dramatic correction. For the month, again, real estate recovering, financials, energy, utilities, the most negative, again, technology. So again, we're seeing that, potentially the reign of the Magnificent Seven, the reign of technology may be over this month. But for the quarter, technology was reigning, had a strong reign, and that maybe is over. So if we look at the industry breakdown, had some medical, again, healthcare positive, REITs related to healthcare were positive, a little biotech. The rest of the REITs pretty negative on higher bond yields. Silver, again, we saw correction in basic materials, steel, silver, gold, oil, energy in general, coal. And semiconductors pretty negative. For the week, some construction, so home building positive. Again, healthcare, some oil, some of the REITs were positive for the week. Again, we're slowly seeing REITs, real estate, make a recovery. And again, some of that may be, sector rotation. And again, we'll talk about that in the strategy as well. Again, gold negative for the week, steel, silver pretty negative for the week, aluminum, copper, uranium. Again, we've been watching uranium, and I'll just pop that one up real quickly. Semiconductors, again, very negative on ASML, TSM. Again, it looks like uranium is cycling down, so we're watching several of our favorite uranium companies, DNN, LEU, UROI, etc. So again, my humble opinion, looks like uranium cycling back down. So we'll be watching that for opportunities when it bottoms and cycles back up. So possibly, the near-term hype in the uranium is getting exhausted. It's again a commodity, cycles up and down. So again, we'll wait for that to cycle down and possibly find some opportunities to swing uranium back up. For the month, gold been strong, gold, silver, real estate, etc. Oil, energy been strong. Financials were strong. Looks like they're correcting a little bit. Again, solar, very volatile on the risk on rate cuts. We saw this exuberant run, significant correction. So I hope that all helps. Okay, next we'll go over some of the economic data from last week, look at the economic calendar for next week. Just a quick reminder, as the important economic data comes out, I try to capture it and post it in the Surf the Markets channel in our Discord. So I'll show you that. Our Discord's free to join. We'd love to have you join us in our Discord. You can find an invite in the description box below. Again, as soon as the important economic data or news comes out, I'll try to capture that, post the graphic from investing.com, also the raw data. Again, any other important news like the ECB decided to leave their interest rates fixed, set at 4.25. So again, our Discord's a great place to see upcoming or current economic news. We'll talk about Amazon Prime Day sales, also oil and gas inventories from FinBiz, etc. So again, we'd love to have you join our Discord. Great place to get current economic news and also talk about all things trading. Great community of traders, help each other out, make money trading, help you succeed in your trading career. So not much Monday. Again, Tuesday, we got retail sales was positive, better than expected, 0.4 versus 0.1 for June. So that kind of tells us that the consumer is still spending. We'll also see Amazon reporting record sales for retail sales for their Prime Day. So again, we'll talk about that. I'll mention it again in our strategy section. So all the retail sales were pretty positive, higher than expected. So again, that bodes well for the continued strength of the consumer, continued strength in retail. Then Thursday, we got jobless claims data, weekly jobless claims data. Had slightly more than expected initial jobless claims, continuing claims still higher than expected. So very slow weakening of the job market, but not significant where, it would dramatically cause the Fed to have to cut real soon. Although, again, we did see that there was discussion that the probability of a September cut is now very high, and we'll take a look at that again next week. And then July options expiration was Friday. We'll also see in the futures, the VIX has now popped up on some of the decline in the market, additional volatility, It's now sitting around 16.5, so the additional volatility again makes options slightly more attractive going forward, and we'll talk about opportunities with selling or trading options again tomorrow as well. So we'll look at the calendar for next week, and then just a quick reminder, we were talking about the September meeting, but the Fed has a meeting in July, end of July. And so next week we'll talk about the probabilities of a Fed rate cut in July, September, etc. going forward. Again, July we don't get a dot plot, SEP, so it'll just be their rate decision. Welcome, Walter Lyons. Thank you for joining us. Hope you're having a great week. So if I look at the rest of the calendar from last week, zoom it up a bit. So Monday we got some bill auctions. Actually look pretty good. We still got Fed officials talking. So and when and how soon they're going to cut, how fast they're going to cut, etc. will be the focus. I expect to continue to hear the same message. We need more data. We need more confidence. Nothing says they need to rush into a rate cut. So we talked about retail sales data being positive, housing a little weaker, crude oil stocks down, although again we saw the price of oil drop down below 80. Mortgage rates back down below 7. So again, that was positive for the home builders. Building permits up. Housing starts positive. So again, the housing market looks like it's slowly starting to recover. Industrial production capacity up a little bit. Manufacturing up a little bit. So again, we're not seeing weakness in the economy. Job market isn't deteriorating overly rapidly. Again, my humble opinion, I don't see any reason the Fed needs to cut super quickly. Talked about jobless claims, Fed manufacturing positive. Natural gas storage up, but less than expected. So we did see a rebound in natural gas prices. More Fed officials talking. Baker Hughes, slight drop in oil rig count, slight increase in total rig count. So again, probably stabilizing the oil price right around that 80 support level, or now going to be resistance level, but right around 80. We look at the data for next week. Got some bill auctions, red book, not real significant. Home sales. So again, we saw some indicators that might be a little bit better. Mortgage data, building permits. So again, a lot of housing data, new home sales. More Fed officials talking Thursday. So Thursday's the big one. We get PCE data. So that's the Fed's preferred indicator for inflation. So if that comes in higher than expected, that would defer Fed cuts. So that will be a focus. Also, we get jobless claims data for the week. We also get GDP data. It's expected to be positive. So again, no fear of a recession. And again, to kind of go back to Gerald's previous question, again, my humble opinion, I don't see any reason for a bear market. I don't see recession indicators, but a healthy correction in particularly the high flyers, the Mag 7, mega cap tech would not be unexpected. So then Friday, we get the rest of the PCE data. So again, Thursday, Friday, focus on the PCE data, inflation, again, more volatility. We also get Michigan sentiment. So that had declined down below 3% on inflation. So we'll see if that stays there. Expectation sentiment had deteriorated. So we'll see if the consumer's feeling any better. So So again, that'll have some significance as well, and then rig counts, etc. Again, we're still, just in the start of the main body of the earnings season. I'll talk about the Mag 7 earnings calendar when we get to our strategy section specifically. But again, we went through some of the financials. I would highly recommend you look through the list of earnings, who's reporting when, how that might impact stocks you're looking at trading, ones you're holding. Do you want to hold them through earnings, etc.? How to protect your profits, etc. Also, sympathy plays. You can hear, how we trade around earnings. We have a link to our strategy for trading around earnings in the notes, how to make money trading when earnings matter. And earnings definitely matter, but more so right now is guidance going forward. We heard ASML reported really good earnings, but their forward guidance was not as good as expected, and we saw a significant drop there. So again, it's probably more important right now to listen to forward guidance. They'll probably report decent earnings, but again, if their guidance is not as good as expected and expectations are pretty high, then you could see a significant correction. So again, highly recommend there. We see Tuesday, we've got Alphabet, Tesla. So again, the start of the Mag 7 reporting on Tuesday. And again, that can cause some significant volatility, not just in those particular stocks, but also in the Mag 7, the indices. There's a ton of ETFs that are impacted by the Mag 7. We've got Lockheed Martin, some defense stocks, General Motors, cars, MSCI, etc. So just getting into the heart of the heavy earnings season, that will have a major impact on the indices and then individual stocks, sectors, etc. Probably see some, violent rotations based on particularly, again, those the guidance. Okay, let me grab a quick drink and we'll look at the market screen in Webull. Okay, just a quick reminder before we jump over to Webull, if you're not already using Webull, they're offering a number of offers and promotions if you open and fund an account. Again, we use Webull for our market analysis, our due diligence, the majority of our trading. And if you open and fund an account right now with Webull, you can get all these various offers and promotions, including 75 free fractional shares of stock. If you open and fund with 25K or more, under 25K, you get 20 free fractional shares of stock. I think they're worth up to $3,000 each. Also, they're offering a 2% cash bonus for transfers of investments to Webull and a 3.5% match on transfers or contributions to your IRA. Also, as you'll see in a moment as well, they're now offering futures trading, and they have a promotion if you open and fund a futures trading account in Webull as well. So that's relatively new. You can also trade futures in Webull, and we also have a link to that promotion in our Discord as well. So again, if you're not already using Webull, we highly recommend it, and you can use our affiliate link in the description box below. Get all these offers and promotions, and also help support our BeachBum trading community, which we would greatly appreciate. I'm using the online browser version of Webull, and this is the market screen of the online browser version of Webull. like to use that to do some of our market analysis, particularly the histogram, and see a distribution of the advancers and decliners from Friday. So you can see, even though we had significantly more decliners than advancers, the percentage of decline, the majority was very small. So very few had a significant decline, had some balance of below advancers, some very small number of significant advancers. Thought the net inflow was pretty interesting, because even though we saw the NASDAQ was down significantly, we had a net positive inflow all day in the NASDAQ, and significantly more than the NYSE. So even though that inflow declined during the course of the day, it was significantly positive. So again, in my humble opinion, what that tells me is that there's probably some broadening out of the investments in the technology sector. So possibly away from the ones driving the index, the Mag 7. So again, maybe the reign of the Mag 7 is over, but maybe they're broadening into broader technology. Again, a lot of cash inflow into the NASDAQ, positive inflow also in the NYSE, and also increasing over the day, even though, again, we saw a significant correction in the Dow. Just a reminder too, you can also see the near-term earnings calendar here in the calendar widget in the market screen in Webull, so you can see who's got earnings coming up very soon, so you can keep track of that, their expected earnings estimate, etc. in the market screen in Webull. So we'll look at the best performing industries for the week. So office rebounded Xerox. Xerox had been very negative. I've been looking at that a little bit. Kodak. So that's a indicator of a part of our theme is, if the reign of the Magnificent Seven is over, so where's the money going to go? And in my humble opinion, I think we're going to see a rotation of leaders to laggards, laggards to leaders. So again, these are some of the laggards. We're seeing the start of some rotation there. Education, healthcare. Again, healthcare had been lagging. Home builders have been, beaten down. Utilities been somewhat volatile. Oil and gas mostly positive. Freight mixed. Banking pretty positive. We just had most of the banks report, weren't too bad. Consumer goods mostly negative. REITs mostly positive. And utilities positive. Got the ETFs. So short on the Dow, short on the Qs. That's probably mid caps, short on mid caps. Short on the Dow. Short on mid caps, short on the S&P, short on the NASDAQ. So again, pretty much short all the indices pointing down. Up on the VIX. Again, we saw the VIX finally get a little bit of a perk back up into 16.5 or so. It's probably short on small caps, short on the Russell. Industries, mostly red except for healthcare and utilities. Few basic materials, copper had a rebound. Commodities, wheat, we're going to talk about wheat. It's come down, looks like it might be bottoming, potentially swinging back up. Natural gas. High yield is getting attractive again. Let's also look at the futures real quick. And we see that rollover, made a new all-time high, rolled over the Dow. Same way with the S&P, new all-time highs, like the 30-something all-time high recently again, finally rolled over. It's got some support. We're in that area, previous consolidation. Again, Dow's got, more room to fall down at that 40,000 level. And NASDAQ's got some support there. Looks like it broke down below that previous bottom. Again, somewhat of a gap to fill there. So again, more downside in the NASDAQ. Euro stocks, broke down as well. Probably get some support at that previous bottom. DAX breaking down, more downside. Again, we saw the VIX finally, perk up. Again, now in the mid-16s. So again, seasonally, there's tendency for the VIX to pop up a little bit in July, more so into the end of the year. So we'll see if that trend continues and we get more volatility. And oil broke down below 80. Got support at around 75, or it could regain that 80 level. We'll see. And natural gas had been declining, got some support a little bit above 2. Bounce back up a little bit. We'll see if that's the start of another uptrend. Again, gold made a new all-time high, made a new run at 2,500, didn't quite get up there, got rejected, and then corrected, dramatically. So now it's got good support at 2,400. If that does not hold, we're going to drop down in the mid, 23s. But again, pretty good support. It briefly dipped below 24, reclaimed that pretty quickly. So that 24 looks like a pretty good support level. Silver also broke down below 30. It's got, good support around 29 or so. So we'll see if that 29 holds. Again, otherwise, more downside in silver as well. Copper, dramatic drop and potential bounce. I was looking at the ETFs. For copper, it wasn't terribly attractive, but one you can take a look at. We'll take a look at that when we get to our ETF sheet as well. Talked about corn recently. Look for opportunities for swinging that. Also tomorrow we're going to talk about wheat some more in the WEAT ETF. We can use to trade wheat long. So I might have missed the very bottom. It didn't quite hit the 52-week low, and then it might have already started to bounce back up. We'll see if we can swing wheat profitably again. Lumber bounced pretty significantly. And again, we saw all the bonds kind of top out, roll over. So bond yields had dropped to the low 4s, and they rebounded. Now they're 4.3, 4.4. So we saw all the bond prices kind of peak and roll over. And DXY had bottomed in the 103s and has bounced back up to 104 or so. Saw the yen did have a recovery, got peaked out, got kind of rejected. Then we saw that strong market on close with the US dollar to yen. We'll see if that means it's going to make another upswing, or again, if yen has not held these previous pops very well. So we'll see how that performs. Okay, so given all that information, we'll identify those opportunities. We then jump over to our ETFs Google sheet and identify ETFs we can use to long or short those trade ideas. So, and you can gain 24/7 access to our ETF Google sheet by joining our Patreon at the All Access or VIP level. Again, that's kind of how we strategize. So identify a potential opportunity, then look for a potential ETF to trade that trade idea in our ETFs Google sheet. So we'll take a look at some of those we just talked about, and then I'll check the chat a second and see if there's any other ETFs that you guys want to focus on, any other themes, topics, etc. We can take out ETFs to trade those trade ideas. Okay, I'll try to keep an eye on the chat, see if I catch any that you particularly want to focus on. Otherwise, we'll spin through some of the ones we just talked about. Talking about corn. So you can see the corn ETF, you can see the risk reward profile. It's not all that exciting, but again, if you want to swing corn, you can kind of see where it's currently at relative to its 52-week low, etc. We talked about the correction in all the indices. We've got ETFs, a lot of good leveraged ETFs to trade if you're nimble, trading those corrections, those exuberant runs. So you can see, we're going to talk about S-Dow tomorrow. Dow, again, made a recent high. So S-Dow made a low, bounced back pretty quickly. So that's one that we're going to be watching tomorrow. And Fang U and Fang D, so very similar to the Magnificent Seven. So another way you can trade a majority of the Magnificent Seven stocks, short with Fang D, long with Fang U. Talked about the corrections, the quick run up and the corrections in gold. So we've been, hopefully I don't, talk about these all the time. GDXU long, GDXD or dust or GLL. I was also looking at GLL as ways to short gold. So again, if you're nimble, good. We had a lot of volatility in gold and silver, so some good short-term trading opportunities using the ETFs and leveraged ETFs with gold and silver. See Mike's talking about Brazil. We have some ETFs to long and short Brazil. So, and these. Going to also talk about, we've been watching Mexico. MEXX is the long on Mexico. So we'll talk about that again tomorrow. It has bounced back up, might be rolling over again. Again, ETFs to long or short the NASDAQ, SQQQ, short, TQQQ long, natural gas, long oil, short cold, or long UNG or UNL. We've also got plenty of individual stocks. You can long or short the Mag 7, so NVIDIA, Amazon, etc., Tesla. We've got a number of leveraged ETFs that you can use to even short those Mag 7 stocks. So if you believe the reign of the Mag 7 is over, you might want to also look at some of those short individual stock ETFs. Talk about rare earths again tomorrow, or why it's been declining, the rare earths. So we're looking for a cycle back up in rare earths. Talked about that retail stronger than expected. Again, if you were nimble and could catch that violent upswing in the Russell, up URTY, short SRTY, similar with the S&P. Talked about the silver, AGQ long, ZSL short. Broad technology, TECL long, TECS short. And we talked about the volatility in the treasuries. So we've got a number of treasury ETFs, different durations, etc. Again, a lot of volatility there. So if you're nimble, make some money there. We talked about watching uranium. So we've been keeping an eye on those ETFs, see if they're coming down. Volatility up. So UVXY finally starting to swing back up. Talked about wheat. So again, wheat didn't quite make its 52-week low, getting close. So again, that's another one we're watching for. Swing in the near future, potentially. Again, I might have missed the bounce. But again, if you want to swing a wheat long, a WEAT, and we talked about the yen, volatility, YCL long and YCS short, or also FXY. So okay, I will keep our ETF Google Sheet open for a few minutes. If anyone else in the chat has any other specific ETFs, topics, themes that you want to take a look at, we can do that. We'll get to our theme for this week. Grab a quick drink, and then we'll talk about whether we think the reign of the Magnificent Seven is over and what that may mean for making money trading, for sector rotations, etc. Okay, again, our theme for this week is we want to see, is the reign of the Magnificent Seven over? And again, what does that mean in terms of opportunities to make money trading going forward? Firstly, I wanted to look at, there's this ETF that we have, and we have this ETF in our Google Sheet in the Research tab. Well, I want to also look at it in FinBiz. So again, you can search for the Magnificent Seven. We have the MAGS. So this is a long on the Magnificent Seven. So you can see it's still pretty high. Again, you can see that risk reward profile for MAGs in the Research tab in our ETFs Google Sheet. Also put a link to the chart in FinBiz. So I want to quickly take a look at that. So we looked at FANG-U. I'll look at that again in a minute as well. But we see MAGS, the Magnificent Seven ETF, made a new all-time high recently, and then corrected pretty dramatically, pretty quickly. It's now below its short-term moving average, got significant room down to its longer-term moving average and to its support trend line. So again, in my humble opinion, in the short term, I think potentially it shows the reign of the Magnificent Seven is over in the short term. I think there's more potential downside, more profit taking. Again, in my humble opinion, all the Mag 7s got very, overvalued. I think, profit taking, etc. So in my humble opinion, more potential downside in the short term in the Mag 7. I'll talk about my longer term opinion in a minute. I also wanted to look at what we saw in FANG-U back in 22 and 23, because again, in my humble opinion, I think we might be seeing a very similar rotation to what we saw in that time frame. So again, not exactly the same as the Magnificent Seven, but most of the same constituents. The old FANG stocks, Facebook, Amazon, Netflix, Google, etc., Apple. So again, we saw it break down below its trend line. It's got some room to fall before its longer term moving average. And again, I wanted to go out and look at what we saw between 22 and 23. So if I go even to the monthly, So we saw that big run up in 21, topped out in late 22, and we saw that, pretty dramatic decline back down. So when we see these roll over, we see a significant time period of longer term correction. Now back 23, big run up, 24, see that big spike, new all-time high, and then a quick rejection. Again, in my humble opinion, these got, even more or highly valued than they were in 21. And now I think, we're seeing a correction. We might see, I don't know if it'll go as deep as it did, 2023, but a cycle down. We can see these long cycle up, long cycle down. But then on the shorter term, we see, potentially a lot of volatility. So, and I think we're going to continue to see, we'll see buy the dippers. I think the buy the dippers in the Mag 7 are pretty relentless, particularly from a retail standpoint. And I think we'll see those little run-ups, rotation back. But I think potentially the rain in the short term of the Mag 7 may be over. And we may see a significant time period of a correction as they kind of grow into their valuations. Longer term, I think, I don't think the reign of the Magnificent Seven is over for the very long term. I think they have potential, with the AI, as AI, comes of age. I think the Mag 7 are, some of the best stocks. And again, I think eventually we'll see, the buy the dippers will jump back into the Mag 7. We'll see a swing back up. But I think, again, as we saw, that may take some time. Again, love to hear y'all's opinion. Do you think the reign of the Magnificent Seven is over? Why or why not? Where do you think the money's going to flow from Magnificent Seven to other tech, non-tech, to the laggards? Are we seeing that typical rotation, leaders to laggards, laggards to leaders? And if so, which of the laggards do you think might take over in the short term if the reign of the Magnificent Seven is over? Couple other factors. You heard the recent news with the CrowdStrike outage that impacted all kinds of industries, airlines, etc., government offices, etc. And there was talk, since that only affected Microsoft Windows. My question is, how do you think that might negatively impact sales of Microsoft Windows PCs and or Azure usage? Apparently, they were using CrowdStrike also in Azure. So again, how do you think that might also negatively impact Microsoft, some of the other tech stocks, etc.? So it might have some lasting impact on Microsoft and also the other Magnificent Seven. Again, we talked about, the Mag 7 carry a very high weight in all on the major indices, the Qs, the NASDAQ, the SPY, a lot of ETFs. So as the Mag 7 sells off, a lot of those ETFs, the indices are going to go down. When they come and buy the dip on the Mag 7, again, that's going to buoy the indice up. Those ETFs also. Also, I found an article with the earnings dates for the Mag 7. So you can find that link to that article in our notes. So if we go down, we can see when the Mag 7's reporting earnings. So we've got Tesla on the 23rd, Facebook Meta on the 31st, Microsoft on the 30th, Alphabet on the 23rd, Amazon on the 1st, Apple on the 1st, and NVIDIA not till the 22nd. So again, starting this week, we've got, Tesla, we've got Amazon, Alphabet, Google reporting. So again, major impact on the indices, the technology sector, related companies. So again, I think what's important, I think they'll do well on earnings. Again, my humble opinion. I think their previous quarter, they'll do real well on earnings, but it's more so their guidance going forward. Is their growth going to stagnate, slow? And what is their guidance going forward, for, particularly for growth? And again, I think we're going to see a rotation of money. You've got money managers, fund managers have to look for yield, and I don't think they're going to find that in the Mag 7. Although, again, the retail buy the dippers and others will probably continue to buy the dip in the Mag 7 on any significant correction. So, again, love to hear y'all's feedback. Do you agree, disagree? Why or why not? And again, please put that in the comments to this video in our Discord. Again, got Discord's free to join. Got plenty of different channels for different trading styles, different asset classes. So again, we can continue to do these discussions 24/7 in the Discord. We'd love to have you join and actively participate in our Discord. The other thing we've been talking about, we talked about last week, was Christmas in July of 2024. We talked about the Amazon Prime Day. We wanted to see how the results from Amazon Prime Day come out as a potential indicator for the retail sector, for strength of consumer going forward. And you'll see, I posted this also in our Discord in the Surf the Markets channel, that Amazon announced record-breaking sales for Prime Day. So again, that we're not seeing, the consumer hold back. So it is Christmas in July 24, at least for Amazon. So again, we don't see the consumer slowing down their spending significantly. They're still buying deals on Amazon through Amazon Prime Day. So we'll see what that bodes for back to school, etc. But so far we saw, again, stronger than expected retail sales in June. This bodes pretty well for July. So no sign that the consumer is slowing down their spending at this time. Also been talking about how to make money trading in July, so you can find links to those previous discussions as we wrap up July. Also got links to how to make money trading in the summer. So again, we'll talk about August soon. And again, if the reign of the Magnificent Seven is over, what sectors do you think the money managers particularly will rotate their money into? We talked about, the trend laggards to leaders. So we look at the laggards from past quarter, past months. We might see that rotation out of technology, out of the Mag 7 into those laggards. So again, ways you can find, who are those lagging sectors, find the individual stocks if you want, or use ETFs to, again, trade that rotation. So again, we'll continue to see if that holds up. Tomorrow we'll also talk about how we can use dividend-paying stocks to generate income, and also several option strategies to also generate income, in addition to our swing trading stocks. So again, if you have any questions, comments, we'd love your feedback. Do you think the reign of the Magnificent Seven is over? What do you think in terms of where are the trade opportunities going to go? And also, again, if you have any feedback on what we can do to improve our weekly trading game plans, any of our videos, our tools, Google Sheets, our community, etc., to help add more value for all of our fellow BeachBum traders. Again, we'd love your feedback in the comments to the videos, in our Discord. Again, you can tag us in our Discord. We're BeachBum Trading, all lowercase. There no other characters or numbers, etc. So it looks like I've got a couple imposters I need to take care of. And we would not DM or message you without your prior knowledge in the Discord. And you can also find links to all of our social media sites, as well as the invite to our Discord in the links section of our homepage, beachbumtrading.com, bum without the U. So again, plenty of ways that you can ask us further questions, provide us with your feedback. Again, and we need your feedback to help to continue to improve and add more value for all of our fellow Beach Bum traders. So again, we hope you'll smash the like button on our videos. Help us try to get the Google algorithm to show us some love at some point. We really need your help to continue to spread the word about our community, share our content, repost our content on your social media, invite your fellow traders and friends to come join us in the Beach Bum trading community. So thank you again to everyone who's joined us in the live chat today, everyone who's watching after the fact, and we hope you'll come back again tomorrow, same bat time, same bat channel, 10 a.m. on Sundays, where we'll take all of this input and we'll use it to select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. And again, we'll look at how we can also use dividend payers and several option strategies to make money while we wait for our top swing trading stocks to set up. So thank you again for watching, and good luck and have a great day.